So it's just been announced that the capital gains tax for landlords is set to be increased. I would assume maybe as soon as the next kind of interim budget is announced. The Chancellor's had some research done that shows that there's a lot of money to be had from landlords and also any kind of people buying and selling shares and other type of assets. But because it's a property channel, our concern is really the impact for us as landlords. I guess from my perspective, it again reinforces the need for new purchases to be done under a company umbrella. Secondly, to make sure that if you can and the cost is justifiable, to move your legacy portfolio under a limited company umbrella. The reason why I say that is because capital gains tax. The reason why I say that is because capital gains tax is charged when you are buying, holding, and eventually at some point selling on the asset. If you were buying and selling, buying, renovating, and selling immediately or as soon as you can, then that's considered as trading. And trading, the profits on trading will be charged at corporation tax level rather than your personal tax situation. So if you were doing this under your personal name and you were a high taxpayer, you were buying a house, renovating, and then selling on, the profit that you are going to be making will be taxed at your highest rate, which is your 40% tax rate. But if you were doing the same project under a company umbrella, right now as we speak, the corporation tax is around 19%. So, and that's looking to remain relatively low, especially as we enter a prolonged period of recession. Because whilst technically we are in a recession now because we've had 2 quarters of negative growth in the economy, but we know why that's happened when a lot of our economy is based on service, the service sector. And when you close the service sector, like bars, clubs, hotels, resorts, etc., you in effect cripple the UK economy. So because of that, we have seen a massive decrease because of COVID period. The anticipation now, having heard the news around the vaccines coming between, in kind of back end of this year, Q1 next year, you'd expect that the economy will start opening up again and start trading again. Having said that, I think the worst is still to come from a kind of economic shock to the UK economy next year, because currently we're talking about up to 2 million people may have lost their jobs, their businesses during this 1 year of COVID lockdown period. This is going to be felt, in my view, in 2021, when people are struggling to find work because these businesses have gone to have failed, and also you've got millions of people who are at the same time looking for very similar jobs, either decreasing the ability for them to make a decent income, and also increasing because of the nature of it, increasing the competition for them to get a job. So all of this factored together is going to have a massive impact next year. Now you couple that with this announcement of capital gains tax increase, you might see a rush for some of the landlords, especially some of the kind of the older retiring landlords, rush to sell some of their assets to realize their profits before this is announced. So it is doom and gloom on one side, because me and you are going to be expected to pay more. If you're holding things under your personal name and trading on your personal name, I would say definitely speak to your accountant, speak to your tax consultant to help you shape a strategy forward. But on the other side, because of landlords, existing and older landlords who are looking to will cash out sooner rather than later, that will prompt maybe a bit of a deluge of properties onto the market. And coupled with the fact that what I talked about earlier on is the recession happening and less people having jobs, lower paying jobs, there will be a lesser demand on these properties. So on one side, you might have landlords and other people who maybe have one or two and think, I'll get rid of it now before this capital gains tax really bites. floods the market with a multitude of properties. On the other side, you have less buyers because of the COVID situation, redundancies, less pay, less ability to raise a mortgage. You may have yourself a good opportunity to buy some really good asset at a lower price than you would have normally expected, because the demand's not going to be there for them to buy from buyers, and the sellers might be looking to cash out very quickly. So it's interesting times. I think it'll be interesting to hear what your comments and thoughts are on this, and post any comments and your views below, and we can have a proper conversation about what are some of the tactics that we should be employing. I mean, personally, I've moved over the last 3 years my legacy portfolio under an LLP into an LTD. And then since the last 4 years now, been trading under a limited company. So everything that I'm buying is under a limited company. And yeah, so that's the strategy that I've employed with my, with having consulted my tax experts and accounting experts. So it'd be interesting to hear what you guys think and what are your plans for the next at least 12 to 24 months. So post your comments, otherwise I'll see you in the next video.